30 seconds? Oh my gosh, I took my eyes off the clock. Oh! Hurry, get a coffee. All right. G'day, mate. How are ya? How's your mum? I guess I should launch traders, huh? Bum, 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 bum. All right. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to go through our daily trading routine. Technical and fundamental analysis with the overriding goal of planning our trades in advance. Now, you're wondering, Wayne, why would I want to do that? I like trading by the seat of my pants. I like to go for it. Well, the reason we do this is that trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let's go. So good morning. Oh, look how tall I am today. Dracula. Anyways, hey, welcome to my office. I wish I could get the lighting nicer. It's a little blurred out or whatever you call that, saturated. Whoa, look at that. Oh. How about, is that better? That's probably better, huh? Anyways, hey, welcome to my home office. Yeah. Hey, sorry about last week. Last week was a biatch. Oh my goodness. But we want to talk about positive things. Why? I don't know why people tell me that. So anyways, let's talk about the good things. You and I are together. We're alive. We're trading. We have a week in front of us. We have a busy week in front of us, so that's good. It might offer opportunity, maybe offers threat, but at least we could read the market. The major benefit of this collaboration between Traders and Traders Way is that we have the analytics and we have the execution, which is exactly what we need. And what we're trying to do here is not beat the market, we're trying to be the market. Now, what does that mean? Well, we're not big enough to be the market ourselves. We're not market movers. We're retail traders. We don't trade billions and billions and billions and billions and billions and billions of dollars a day. But the market does. In fact, the Forex market is what, 7 trillion a day? So what is it that we're trying to do? If we can't beat the market, if we can't outsmart the market, then we're just trying to figure out what all the institutional investors are doing and then trade along with them. Let them move the market, we'll go with them. So it's kind of like, I don't know, ethical insider trading. You have to be able to read the tea leaves and understand what the institutional investors are actually doing with their money. And that's what we're doing here. To know the secret of what's happening and not just, look, you can always skippity scalpy and that's your thing. But there is more to it. There is more to it, but you have to have the tea and the leaves. So that's what we're doing, We have the tea leaves that can be read. Yeah. So when I ask you a question like, hey, what's up? Are you risk on or risk off? It's not a guess. Stop guessing. And it's so funny because AI guesses all the time and you have to constantly check it and yell at it like, dude, I told you. I told you never to guess. Well, I'm telling you, stop guessing. We have the data. So take time to read the tea leaves and get aligned with the market. Be the market. Don't be against the market, You're not going to beat it, so join it. Let me get my coffee. Yummy. How's he not going to read this? You son of a gun. All right. So anyways, I'm eyeballing this. And I says to myself, oh, that's good. That's not good, but boy, better than it was, Did you see it Thursday and then again on Friday? OMG. We are staring at, what was it, 16 and a half, 17? Oh my goodness, was that good or what? You know what? Hang on, I'm not getting the chat. So let me go to YouTube, Forex.Today. Just want to make sure I'm getting the chat here. Maybe your fingers are quiet today. Wayne, I don't want to type. There it is. Oh, Emerald. Yeah, good. Now I can see the chat. Yeah. So, how many times is the BOJ going to intervene? Well, I can. First of all, I can guess. I don't like guessing, but let's put it in the context. What are they trying to do? They're trying to strengthen the Japanese yen. So typically, you would be sort of like a one and done type thing under a normal circumstance. But remember, in this case, it's not really truly monetary policy going on. So I prepared you guys weeks in advance, that this was coming. And I explained why. Now, first of all, I also explained why I knew it was coming. They told us. Did you know that? They actually told us that they were going to do it. It was in the tea leaves. Yeah. The second thing is the rationale, understanding the rationale of doing it. They need to buy oil, but every time they buy oil, the yen gets weaker, which means they need to sell more yen to buy more oil, which makes it weaker. And we discussed the terminology. It's a vicious cycle is the economic term for this. The more they spend on oil, the more it weakens the yen, which means they need more yen for oil, which weakens the yen, which means they need. So anyways, so all of this was well known way in advance. We had 160 as the psychological level, but I also said that the real trigger isn't the psychological level of 160. It was, we also needed oil to spike well above 100, which we got. So then I said, this is it. We have everything we need. And I think within 24 hours of that warning, we got intervention. Is it likely to happen again? Well, Japan will probably need to buy more oil. So again, this isn't a monetary policy thing where they're actually trying to, for let's say economic reasons, strengthen the yen. What they're trying to do is they're trying to buy oil without killing the yen. So if they're going to need more energy, will it happen again? Yeah, I would guess so. Otherwise, the yen will weaken and weaken and weaken and weaken and weaken and weaken and weaken, and it'll get out of control. Just think of Turkish lira for completely different reasons, but the same sort of outcome. The more that Turkey paid back their loans in euro and in dollar, it weakened the Turkish lira more because they don't have the foreign exchange, because they don't play well with the rest of the world. So their central bank doesn't have euro and dollar in the vault. This is what central banks are supposed to do. But if you don't have an open economy, well, then you don't have the foreign exchange. But bear in mind, Turkey took out lots and lots of loans, in particular in euro, right? So every time they had to make €1 billion loan payments, they had to take the Turkish lira, go into the interbanking system, buy the euro to pay their debt, which would weaken the lira, which means the next time a debt payment came up in euro, they would have to take their weak lira, sell it to buy more euro, which weakens the lira even more, and it's a vicious cycle. Like they say in Canada, it's the same, only different. So Japan and Europe. So they could do it opportunistically. Just when the country happens to want to buy oil, they'll want to strengthen the yen. Or if WTI drops below 100, that would also kill the need. Okay, Emerald? So you want to focus on the need. It's not monetary policy like typical intervention. If WTI is at 98, they're not going to like it. Japan won't like it, but they won't need to intervene. If it's 105 to 110 or above, it becomes more necessary. Yeah. Yeah. Okay. Yeah. So it's interesting because it's not monetary policy. Gold down, not good. Bitcoin up, good. WTI up, not good. Dollar, look, it below 99. I'd call that pretty good. Although, we want that to be weakening. We don't want it to go back up. And then this is bad. Look at this. We just hit 4.4. Remember, I wanted this to be like 4.25, not 4.5. So when the 10-year gets to 4.5, or if it gets to 4.5, that's a huge psychological level. And you probably want to look at 5.0 on the 30-year. How do you do that, Wayne? Oh, well, you just go to fundamentals and click on the bond radar. Dude, you're not tracking bond yields? You care about NASDAQ going up? Well, only 7 companies in the NASDAQ are up. And you care about that? And yet you don't track treasuries? Really? It's 10 times, maybe 20 times the size of the stock market. And the stock market right now is, the NASDAQ 100 is 7 companies. The other 93 nobody cares about. So really, I think you need to start getting into treasuries. Because if significantly more money goes into treasuries, guess what? If you're a Forex trader, are you trading money? Yeah. And if money is flowing in and across borders, let's say a foreigner wants to buy a 10-year T-note, guess what? They need to convert their local currency into this new foreign currency we call the reserve currency. And that changes the value of the US dollar and changes the value of the local currency. And boy, isn't that what we do as Forex traders? X minus M? Yeah. Yeah, bro. Yeah, bro. That is what we do. So you should care a lot about treasuries. Sure, NASDAQ's fun, but you should care about treasuries, huh? All right, let's get into headlines.
Brent, higher prices needed as Hormuz stays shut. OCBC. Gold prices slide amid fresh Hormuz tensions.
Asian stocks extend gains.
Senior Iranian official, unclear whether there was damage to US ship. Reuters.
UAE says its oil tanker was fired at by Iranian drones in the Strait of Hormuz.
Pound US dollar drifts below 1.3550 as rising US-Iran tensions sour sentiment.
ECB. June leaning shapes. Euro outlook. BNY.
Czechia manufacturing growth remains strong in April.
Good job, Czechia! Dude, the best beer in my entire life I got in Czechia. Back then it was Czech Republic. In a little town called Pilsen, where Pilsner beer comes from. Oh my God. That was so good. So let's take a look at your risk radar. Let's answer the question. Thank you for participating in the poll. I appreciate you. And nothing going on today. Not yet. Okay, nothing going on today. But in general, we're risk on. So 38% of y'all said you are risk off. And I can't confirm that quantitatively. Okay. Junk bonds, as an example, are not crashing yet. Now, maybe you're thinking ahead and you're like, okay, Wayne, sure. If you look at all these variables, they're not risk off. But it's going to be risk off. Okay. But it's kind of startling, isn't it? 38% are risk off and are not aligned with actual market conditions. So I would say to those that are the 38% of us here in the live stream that are risk off, I'm not saying you're wrong. And you might be right. You're probably right. You're just not correct now. And you should probably ask yourself, or let's say it differently. If I were in your shoes, I would ask myself, why am I more risk off than the entire market? Okay. Are you looking at enough data, or are you going by feel? Are you going by what somebody else told you? But quantitatively, you are not aligned with the market. Now, for those that are risk on, I could go with that because you're not very risk on. So you're like, well, look, Wayne, nothing's happening yet. But in general, yeah, I'm risk on. Okay, I could buy that argument because now it's a time issue. Very risk on, another warning sign to those that are very risk on. How do you quantify that? You're like, well, Wayne, VIX has dropped very significantly. Yeah, it's true, but not today. So you're very risk on. You're buying. You're a buyer, but you're like a buyer right this second. Okay, you might be early. Once again, I cannot quantitatively confirm your bias. So you're not trading with the market. You're using, I'll be kind and I'll say it's your alpha. You're using your alpha, your opinion, your bias, your best guess before it's actually happened. So you're trying to beat the market. You're trying to get ahead of the market. Now, you may not be right or wrong. I don't know if you're right or wrong, but you are early. And what I'm trying to do is get you so that your timing might be better. So I cannot, in general, I agree with risk on. Very risk on, you're early. Now, again, maybe you'll be very profitable today because you're in before everybody else. But on other days, you will pay the penalty for basically betting. I bet you it's going to go up today. Well, it's not going up today yet. And it may not go up today. You might be terribly wrong. And we call that risk, and I'm trying to get you to trade with less risk in your behavior, you see? Okay, we're moving on to the next question here. Help us with Aussie dollar. Okay, so I just click a tab. Aussie dollar is not a good trade. Right? Okay. So you're asking the wrong question right off the bat. How does that make you feel? How come you didn't ask about pound dollar or Kiwi dollar? You see how amazing this tool is, guys? The synthetic currency indices that Aiden is calculating in real time. 7 calculations, 7 calculations, 7, 7, 7, 7, 7, 7, 49 calculations every second or two. And I can tell you, help with the Aussie dollar, that takes me less than 1 second because of trade arms. And say, well, that's a very mediocre trade. You'd be way better off pound dollar short, Kiwi dollar short. And then maybe pound yen short, Kiwi yen short. And the other stuff is just not a good trade. Right now, this will change second by second by second, but that trade's not very good right now. Now, maybe you're like, well, Wayne, I was thinking more of swing trading. Okay, but that's also a bad trade. Okay, no, Wayne. I mean longer term. Okay. Aussie dollar up, but not now. No, maybe not even this week. So super easy to answer that. Okay. Cool. It's nice, huh? Dude, this is I like all of this makes me so happy. Right? Like everything we've looked at so far today makes me so happy. This tool I love. I love this tool. I love it. Oh, that didn't update. Hang on. Let me update this. Let me update. It should have updated. Let me update it again. I might have to do a hard refresh. It'll probably force me to go again. But I added something for Jim over the weekend. Because he demanded it. And there it is. Okay, cool. Now where's my YouTube? I lost my YouTube. There it is. All right. All right. So Jim says to me, I want the standard calendar as well. The standard traditional calendar. Okay. So I added this. The standard traditional calendar, Monday, Tuesday. So, right? Here's the Australian interest rate decision. What do I think? Euro Aussie is going to give you 27 pips. That's what I think. Okay. So that's our week in advance. 31 minutes until the ECB speak. So we're right here. I think what I'll do is I'll have this glowing or something like that. He hasn't put in the actual, so I'll work on that. Of course, he's supposed to. And okay, I did not ask him to do history. Well, see. But anyways, cool. So there's our week. Very traditional. Yeah. Wednesday, ADP, Canadian PMI. Just checking it. API on Tuesday. Yeah. Yeah. Jolts on Tuesday. ISM manufacturing on Tuesday. Good, good, good. New Zealand jobs. Good. So here's our comprehensive. I didn't put the non-important things. I put medium. Well, actually, I guess the grayed out ones are, but whatever. So we have a traditional calendar. Yeah. So Thursday, EU retail sales. Okay, Thursday is actually fairly quiet. Yeah, Brian, I see your comment. The issue is Japan is a fault line. No, Jim. I know you wanted the other. Oh, you mean that? Oh, yeah, no. The problem is I don't believe it was accurate. That was the problem. You're meaning it was saying this will go that way and that will go that way under those situations. Yeah. I'm trying to get something better than that. Yeah. Yeah. And that's where this is going. So when we go to here and okay, this is supposed to be more accurate. Yeah. What I'm building will be more accurate. So that's the process. I just the other one ultimately I believe was not true. Yeah. I mean, it was nice, but I don't believe it was true. Hence, but you know what you may also be saying here is maybe this could be simplified. And if you just want direction, yeah. Ultimately, I can build whatever you want, Jim. Yeah. I can try something like that. I found it wasn't, yeah, I don't know, accurate. I just want something better. And so, of that part, so now I know which one you're asking for. Of that, why don't you tell me the part of it that you liked most? Just email me that. Yeah, but that's what this does too. It's supposed to. Let's see. See? USD yen 11 pips. Okay. Now, this wasn't actually supposed to be doing this analysis, factory orders, X transportation. So I'm working with Aiden because he's doing it for everything. And then he finds he can't get enough data. I'm like, yeah, but we don't even care about factory orders that much to need this type of detail. But so I'm glad he didn't go through and do 3 years of analysis here. But the idea is it'll tell you the pair. Yeah. Right. I agree with you, Jim. But it's going, I hate saying it's going to. but it's going to be amazing. Oh, Tim, you know what? You're probably on tradears.com, right? And it didn't pop you. Try analytics.traders.com, Tim. Or, yeah, or click the login button and log in first and launch it from inside. Yeah. Yeah, I think I know what you're talking about. If you just go to traders.com and yeah, it's supposed to pop it out and it doesn't pop it out. Okay. And what about the carry trade tab HDO producer? What is it that you're asking? So anyways, Jim, I promise you that this will be better. Okay? Yeah. Yeah, a lot of effort's going to be put into this in the next week or two. Yeah. Because I find this incredibly important too. Yeah. It's just been very challenging, which is interesting. But for everybody here, I intend, that's how I like to say it. I intend to build the industry's best calendar, a calendar for traders. The traditional calendar is okay. But I intend to find something or build something better, more useful. And I'm trying different layouts and different use cases. So you can see that this one's highlighted, that we care about this one more. It's also highlighted because it's the one that's supposed to have detailed analysis. And the other stuff shouldn't have detailed analysis. So he's still working that out. So I will work it out. Also, this excites me a lot. So this is a sample of what happens right as the news is coming out. And you see live, real-time valuations for these currencies. And then the news can come out, and then if there's a dramatic change in the dollar or a dramatic change in the Aussie dollar because of the news, you will see it live in real time. H2O producer. Yeah, so you're talking about Rand, huh? So you're asking for an interest rate differential tab, huh? Yeah, Jim, I love it. I love it. So the whole point is really setting this up so that that you can see the market in real time around the news. And I think this will take our calendar to the next level because then you can see the volume and volatility second by second. Plus it keeps you up to date and alert, and you're not going to forget, and you're informed, and so that's where it's all leading to, and it's cool. Yeah. All right. So anyways, that's happening. We also have this view, which is interesting. It's interesting. It's getting there. Tuesday's a big day. Okay. Yeah. Friday is a big day. Yep. Yeah, well, HGO producer, the thing with carry trades is interest rates don't change very often. So, and you very often get like an emerging market that has a 10% interest rate versus a mature economy that has a 4% interest rate. Even the differential, if the emerging market cuts it from 10 to 9.5, interest rates in the other central banks don't change that much. And the magnitude is high enough where even though the emerging market cut interest rates is still such a big difference that it doesn't kind of matter. So in my mind, at least, I sell the USD Rand as an example, right? And I sell the USD Mexican peso. That's not ever going to change. Not for years, anyways. So you're like, stick it all there so it's easy to know when to get back in. So you're talking about getting back in. That's just basic, boring technical analysis, right? The complicated part, which is the fundamental side, is also fairly basic, right? So, in the sense like Mexican peso strong, or Mexico pays more than the United States, so you're always going to be short. Cool. USD Mexican peso short, always. So the rest is it a lower high or not? As far as getting back in, the decision to be short to me never really changes. So now you either sell at like a daily 21 or you don't. But, right, when do you get back in? On the pullback. Okay. So now what makes it tricky is the value of the reserve currency, the dollar, changing around geopolitics. It's strong, it's not strong. The war's on, the war's off. Oh, the war's back on again. But otherwise, and that's why stop losses are used. But, a lower high is a lower high. That's how you get back in. I like to use moving averages to identify a lower high. Great. Sell at the daily 21. Done. That's how I know to get back. So anyway, so we have today's view, which I like. Needs improvement, but I like. I like this weekly a lot. The monthly I'm not so sure about, and now we have the traditional one, which I do like. Needs to be improved, but I do like it. I do like it. And it's comprehensive. Now, traditionally, I don't like the traditional calendar. I look at it and I'm like, yeah, some of this I care about, some of this I don't care about. You're like, yeah, okay, good to know. Fine, good, great. But, it's not going to move the market. And it might be high because it's important to economic analysis. But is it going to move the market? See, that's the point where I say, like, I want to build, or I intend to build, the best trading calendar in the industry. Because we, as traders, only care about what's going to move the market. And if you can tell me what direction, I appreciate that. And that's what this calendar is becoming. And you'll probably switch back and forth. They're like, okay, check the traditional calendar, but check this. And this calendar will be built on magnitude and direction of market moving events with real-time volume and volatility. In this case, it's not really volume, so we'll just call it volatility, right? Real-time volatility in asset price change. So you could very quickly jump on the right thing at the right time, the thing that's moving right this second, and avoid things like, Wayne, what do you think about Aussie dollar? Dude, what the heck? Aussie dollar? Why do you care about that? It's mediocre at best. Why don't you look at pound dollar? Okay, that kind of thing, right? So you'll get more information in 2 seconds than most people get all day. Look at this, don't look at that. Focus on this, don't focus on that. Worry about this, don't worry about that. Okay. So, HTO producer, I'll build something for you. Look, it won't be a high priority in the short run, but I'll build something. Yeah, I can build. Yeah, I don't know. We'll get there. So what do we see? Dollar strong, dollar strong, dollar strong, dollar strong, dollar strong, dollar strong, dollar strong. And look at, I said, why are you looking at Aussie dollar when you should be looking at pound dollar? Okay, but we've already established that. Okay, so this is a different methodology that kind of does the same thing. Think of it as a check and balance. So we looked at the indices, okay, or the synthetic indices, and it said pound dollar is better than Aussie dollar. That's pure statistical analysis. This is also, but a different type. I was good because this is statistical analysis. We are looking at, the synthetic indices are relative change in valuation. This is looking at the slope of the mean and standard deviation from the mean on 3 time frames. So it's 3 calculations. 3 observations with multiple calculations each, right? Because you have to do the mean, the slope of the mean, you have to do the standard deviation, so the square root of the mean. But we're looking at the technical trend on 3 time frames. Now, they should be generally the same. They don't have to be, because there could be a radical change. This could go green, 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 green if something changed. But it is different math. No, you're right. No, H2O producer, yeah. I need to conceptualize. Also, there isn't very many carry trades. Like Turkish lira would not be something that I would promote. No. So then we're down to Rand and Mexican peso. True that. But even then, they're emerging markets relative to, like the good old days, HTO producer. was I was making Jiminy Cricket, what was it? Like 700% a year on Kiwi yen. You know? You know what I'm talking about? Kiwi yen. And then Aussie yen was another amazing one. And even pound yen for a while. So it's like, okay, that's when I would really kind of promote the logic of it. But it's not the priority sort of now. Although I do it, right? Like USD Mexican peso, USD Mexican peso, USD Mexican peso, USD Mexican peso. So I'm up 1,000 pips. Yeah. So, but for the Gen Pop, right? Should we be focused on exotic carry trading? Let me move my stop to break even. Maybe. Okay. USD Rand and Euro Rand. So, like, that's a good sell, right? That's a good sell. What about this? Is this a good sell? No. Okay. And now notice I was short this 2 or 3 times, and now I'm not in it at all. What happened? Well, they all got knocked out of break even, but the whole time I held short, I got paid every day. That's what a carry trade is. So now what do I do? Sell the lower high? Maybe. Yeah. But for that, we're going to need risk on. So I'm going to need to confirm that. So that's a maybe sell high. That's a definite top of the range sell high. I need some risk on. I think this week's going to be chunky because it's an NFP week. So maybe. Okay. So, anyways, there's just sort of better, easier, less risk type trades to be promoting, right? Like, or I say promote, I mean like highlight, like pound dollar, dude, you should be short. Oh, whoa, whoop, whoop, whoop. Okay. That's the one I want to talk about the most. Pound yen, pound dollar. Okay. USD Swiss franc long, pound dollar short. Okay. That kind of stuff. It's like if you're missing that, you're missing the entire trade, right? Today's trade. Market pretty scattered. Commodities have come off quite a bit. Look at crypto though, doing well. Let's look at the stock market. Look up-ish. Currencies. Yeah. So dollar and yen strong for sure. Good. We got our commodities working: wheat, copper, gold, silver, platinum, soybeans, corn, WTI, nat gas. That's good. Thank you, Aiden. Bitcoin and Ethereum are up. Cool. 10-year. And I'd like to see, like I said before, I'd like to see like some Aussie in here. But we got some cat. So far, we've done pretty good as far as this tool showing us what central banks are expected to do. But again, we're missing Australia, right? Like we just don't have the data, or do we? No, there you go. Cool. Okay, money into wheat and corn. Yeah, money went into CAD. Yeah, look at that. Money's going into peso for the carry. Yeah, I'm heavily long peso. Dollar weakening, which is actually good. That's a risk on scenario. So like short USD Mexican peso, that's how I got to where's my Build-A-Bear? US dollar. Is it going to even be here? Mexican peso? Yeah, didn't think so. So Australia CAD, right? See, it's putting everything Aussie dollar long. Now, right now, we're worried about intervention, but as the worries dissipate, okay, that could be an interesting play. Yeah. Hang on, my cat's yelling at me through the window. Cats are boss. Let me BRB. I'll be right back.
Brent, higher prices needed as Hormuz stays shut. OCBC. Gold prices slide amid fresh Hormuz tensions.
Asian stocks extend gains.
Senior Iranian official, unclear whether there was damage to US ship. Reuters.
UAE says its oil tanker was fired at by Iranian drones in the Strait of Hormuz.
Pound US dollar drifts below 1.3550 as rising US-Iran tensions sour sentiment.
ECB. June leaning shapes. Euro outlook. BNY.
Czechia manufacturing growth remains strong in April.
Gold declines as hawkish interest rate outlook and firm US dollar way. Australian dollar RBA seen leaning to another hike. Commerzbank. Euro extends losses against US dollar amid fears of an escalation of Iran's war.
Wall Street poised to open lower.
Morning bid, straight talk. Most Strait of Hormuz shipping at a standstill despite latest US pledge.
Euro US dollar resilient above 1.17 with ECB split. BNY.
Crypto today. Bitcoin, Ethereum, XRP edge higher as selling cools, retail demand steadies.
Do it. Romania's foreign reserves fall on political uncertainty. All right. Cat taken care of. 3 seconds, 2, 1. Here comes the big speech. But anyways, folks, I'm willing to build and provide anything that you feel you need to succeed. One of my goals is to expand our community, and I'd like to do more with the community and expand the capability of the community. And that would give you even greater
Greece factory growth
access.
weakest in 7 months.
South Africa total new vehicle sales dipped from previous 58062 to 47979 in April. Okay, so anyways, you let me know what you need, and we'll work on that. Yeah, so I was telling you about the 5.0 on the 30-year and the 4.5 on the 10. These are big psych levels. Look how close we are to 5.0. Yeah. Definitely. So if you're not sure what it means, now you're going to read the yield curve. Remember, we were talking about reading the tea leaves. This is important to tell you, what is going on. And the Fed, bum, 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 bum. I can't hide. There we go. It's funny. It won't let me highlight that. How funny. Anyway, so the Fed is not expected to raise or cut interest rates. Yeah. That's what it says in the tea leaves. Okay, so yeah, I wanted to look at this a little bit more. Stock indices. It's interesting that we're still not certain. The market is negative. Okay, remember, this isn't hedging. We've taken that out. This is asset managers and other institutional investors. And yeah, although, a little bit of money went in. So we're at all-time highs, but we lack any conviction. It's good to know. I don't even know if we can call it moderately bullish. We're bullishly neutral. But what we're looking at here is the inside information I was speaking about earlier. This is what institutional investors are doing with their money. This is their speculative positions, not their hedging. This is their speculative position. The institutional investors are not long the S&P 500. They're not long the Dow. They're not long the NASDAQ. They're not. Okay. In fact, they got even more short the Dow week over week. This is not an opinion per se. These institutional investors, very, 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 very large institutional investors, have huge teams and huge resources. They do deep dive analysis. And then they place their vote with their money. We track the money. Now, I don't know why they got to the conclusion they got to the conclusion. I'm not even saying if I agree or if I disagree. That's all irrelevant. What we're trying to do is get legal and ethical inside information as to what the institutional investors have decided with all the resources they have. And they are short. And they barely did anything on the S&P 500 week over week. They are short NASDAQ. A little less short, but short nonetheless. And yet, we're at all-time highs. Oh, or maybe the Mag 7's at all-time highs. We're not quite as red hot as it might appear if you just look at price. Is it helpful? Good to know? For sure. So what are institutional investors doing if they're not trading the stock market? They're trading real assets. And this is what I discussed with y'all, all y'all, long time ago, when we talked about what do you trade with long-term sustained levels of high inflation. Real assets. Real estate, gold, copper, okay? Physical, real assets. Physical assets. Physical. Gold, copper, silver, soybeans, corn, WTI, all net long. So the institutional investors are going long real assets, real physical assets, but they're not going long financial assets because they're not real. They're not physical. It's interesting, huh? So what does that mean to you as a Forex trader? Well, figure out where the corn and soybeans are coming from. And is that going to, let's say high corn prices going to impact net exports? Yeah, sure. Can somebody publicly shame the spammer? Publicly humiliate? I got rid of them. Cool. So anyways, what else going on? Money coming out. That would be traditionally risk on, wouldn't it? Now, the logic here is if you're not hiding out in treasuries, you're going to put your money somewhere else, usually the stock market. But that's not what's happening. But as I said before, since we did our yield curve analysis, I would keep my eyeballs on that 5.0 on the 30-year. And I suspect people will lock that in. And they're like, you know what? I'll take the 30-year at 5. And money will flow into that. Yeah. And put that would be a bottom in the price. And you'd see money go into the 30-year. It's just not happening right now. But interesting how money is just coming out of that market like crazy. Why is that? They believe interest rates will go up. Up until what? Maybe the 30-year hits 5.0. With my rag top down so my hair can blow. Girlie's on the standby waiting just to say hi. Do I stop? No. I just drive by. You guys like the live charts? It's gorgeous, huh? Gorgeous. So we know the US dollar's strong. The other thing we know, the strongest one right now is USD CAD for up. What about for down? Negative 0.3. This is plus 2.6. So we already did this. Like all of this, even though I've spent what, am I getting close to an hour yet? With y'all, we knew within seconds pound dollar was a great trade that you should be focused on. Yeah. So look at this now. Price is rising on pound dollar, and we're projecting down. Look at the current price, the dotted line, beautiful roll reversal, and we're at the 15-minute 55. Gorgeous. If you want to look at a higher time frame, just flip over to the swinger. And let's focus on pound because it's weak. Interesting. Interesting. Let me go a little further out. Interesting. Notice the dotted line here. Be an interesting place for it to roll over, wouldn't it? Cool. So an intraday trade is if we move toward risk off or not risk on. If dollar stays strong, if pound stays weak, this is your intraday trade at the market open, which means a short here probably gets you down to $1.35. So 62 pips by the beginning of London close. What do you guys think? So you would just go to, pound dollar. Okay. If you wanted to be a bear today, you would simplify everything and say day trading bearish bias. Okay. You're a bear today. So what you're looking at is tomorrow's trade today. See, what was today's trade? Okay. Sell at the bearish selling zone. Target, bearish, profit, target, conservative. So we're done today's trade. You see? We're done. You're like, Wayne, the stock market's not even open yet. Dude, you're a Forex trader. You're 8 hours late. So what do you do today in the New York session? Well, you set up tomorrow's trade. You have to decide, do you want to be late or do you want to be prepared? So this is tomorrow's trade. So your New York trade could be up a little more and then down and around. Okay. Yeah. Another way to eyeball it is price action, which gets you exactly the same thing. You can see we already have a linear projection. It's already calculated, but let me add to this stuff.